Hey everybody, Real Estate Ninja here. I hope you're doing great. Coming to you from an undisclosed location. We're going to talk about they are about to pull the trigger. When I say they, I am referring to certain people in the government along with the Federal Reserve. I have talked about this, 3-4 weeks ago. I put up a video in extreme detail to all my students on the how to prepare for the real estate crash course. But I also did a free version of that course, that lesson on the Fed interest rate fake out. I did it on this channel. I did it 3 weeks ago, and now they have done it. We're going to talk about that. We're going to talk about what's coming in the springtime, what's coming in the summer, and then the big rug pull. We're going to talk about that all here, okay? But first, I want to show you where I am. Check this out. Check this out. It's out. Wait, let's flip the camera around real quick. There we go. Oh, look at that. Would you look at that? Just look at that nice little dusting. Try and Google where I'm at. All right, here we go. Let's turn the camera down. Don't want to drop you. All right, here we go. So, a couple things. First, we're going to have a sale. The 80% off Fed fake out sale going on right now. I got a link down below. If you want to learn how to prepare for this real estate crash course, you could see the more detailed version. But guess what? I've actually filmed some very special videos over the last 3 months telling you what's going to come this next year. And then we're setting them to the editor, and we're going to produce a really nice little mixed video because all of the predictions are coming true. But we're going to dive into a story out of Fortune and what's going on at CNBC right now. First off, out of Fortune, the headline that we're going to read in a second is home buyers are finally feeling relief now that soaring mortgage rates have reversed and monthly payments are at their lowest level in 8 months. All right. Again, if you are a subscriber to the How to Prepare for the Real Estate Crash course, please go and watch the video I put out 3 weeks ago on the course. It's important. It's entitled The Fed Interest Rate Fake Out. All right, here we go. Right now, you are seeing a lot of things that people do not understand how they work, and I'm going to explain them in actually really good detail. So right now, the 10-year bond is under 4%. That's amazing for mortgage holders, right? Wait for it. Gold is up $53 today. Why? Because they know that as interest rates come down, easy money ends up pouring out. And that's when gold does very well, okay? Stand by. Silver is having an amazing day at 6.7%. You know what? I'm just curious. I did a video on this the other day. Let's dive into it. Where is Hercules? Hercules silver. What did it do today? Where are we at? $1.21? Not really that impressive. Ooh, it was up to $1.30 today. Anyway, sorry, I digress. We're going to go back into CNBC. This is what's really important. The markets. The US markets right now are ripping higher. This is what happens when you move into a hyperinflation scenario, right? Right? Now, I said it before, I'm going to say it again. When the Fed said that they penciled in rates, that's their way of trying to juice the markets way ahead of time before they actually have to do it. This is going to be politically motivated. It absolutely is. And you know it is because there's no reason, there's never been a time in history where the Federal Reserve has lowered rates without two things happening. Housing market falling off a cliff, or sorry, three things. Unemployment skyrocketing and the stock market turning down. So you know, why would they tell you they're penciling in interest rate drops? It's because two things. They want to juice the markets before the elections and show that whoever is running this country right now has done a good job. And they also want to juice the markets in a way that they can exit markets. All right. That's why I kept putting new lessons onto that course. If type 1, if you guys remember the video I did about 2 or 3 weeks ago entitled The Fed Fake Out on this channel. I think it's very important for people to understand that. Because in order to truly get over inflation, and all of the inflation numbers do not, they say the exact same thing. Food and energy are still moving higher. So in order for the Fed to stop that, they have to raise rates above the actual rate of inflation. Please understand what's going on. Okay, this is, and again, this is akin, right now you're watching the Dow Jones up 158 points, S&P's up 12, the Nasdaq's up 27, everything's looking amazing. That's exactly what happened in the dot-com bubble. The stock valuations, the stocks are rising, they are still laying off people and they are selling less product than they were a couple of years ago. Our companies are becoming more and more turning into zombie companies. Please understand what is happening here. That is why you need to have a benchmark to go off of. That's what I focus on in my course. And heck yes, I'm going to sell the heck out of my course. Why? Not only because I only have two weeks left till we close the course off to new subscribers, because it's going up 10 times the price I'm offering to it now. Not joking, but because I want to give people that didn't have hope before in not only buying their own home, but buying rentals during this crash. But you are about to be very, very deceived. And nobody's teaching this on the internet. Nobody's talking about real estate cycles. And what you'll see is that throughout history, there have been times, multiple times, it's insane. I go over it more in depth in the course, but the Federal Reserve drops rates and everyone gets excited after they skyrocket them. You know what? I'm going to pull up. I'm going to give it to you right now. Let's do this. Give me one quick sec. We'll do this right, or live. All right. I'm going to show you out of the Fed website itself how it's consistently wrong, but actually it's not. They do this on purpose, these big fake outs. So let's look, we're looking at a chart, the federal funds rate from 1955 to now, okay? All right, so what we'll do is we're gonna pull the first example, and that is 1972. 1970, come on now, connect to Wi-Fi. Oh, you little son of a gun. What are you doing to me? All right, here we go. All right, 1972 was right here. They see this raise right here, and then they had this little dip, and everything was great. Nope, because they didn't fix the inflation problem, and they just spike it up higher. Then everything collapsed, and they dropped it. Look at the early 80s, 1980 to 81. Look at that run up, multi-year, boom, boom, boom. They even did a pause, then they ran it up, paused again, then they spiked it. Then guess what? Let's drop it. And everybody was cheering. People were diving into equities and all that kind of stuff, but only to watch it reverse course again. We actually saw one right here as we dipped, or we came up, we plateaued, dropped a little bit, plateaued, dipped again, and everyone was excited. Nope, it went up again. And actually that one's really important. Why? Because that's right there as the dot-com bubble collapsed. You see, right, this one is amazing because as they ran it up from the mid 90s, what was it, early 90s? I'm blanking out here. 1997. They ran it up into 1997. They dipped it down a little bit. People speculated. Then they plateaued. Then they dipped it again. People speculated, and they ran that stock bubble up. And then right there, they had to bring it up that much. And that was enough to take out all kinds of investments. And then they dropped it down. And that's when I started buying real estate right there. Obviously, I go into way more in depth and it's professionally edited, but you see my point. You see, this isn't the first fake out we've seen. History shows multiple times, and you're about to experience something magnifique. All right, so let's dive into this story out of Fortune, and I think it is very, very important. I'm actually going to give some things that I would do, not advice, but things I would do as not only an investor, as a past real estate agent, because I was horrible at that, owned a real estate brokerage. I've done a lot of things, okay? Credit investor when I was in my mid-20s. It says here, home buyers are finally feeling relief now that soaring mortgage rates have reversed and monthly payments are at their lowest level in 8 months. Remember, there's only 2 types of people right now that are super, super excited about this. People that have bought a home with really super high interest rates and they're freaking out and they want to sell or refinance their house, and that's only been the last 4 months. Also add in the people that are trying their hardest to do debt consolidation. And then there's the second group of people that are about to FOMO into the housing market, but you're about to get walloped. It says right here, after more than a year of mostly rising mortgage rates, home buyers have something to cheer about. The average 30-year fixed mortgage rate fell to 6.62% today, to its lowest level since May, after the Federal Reserve left interest rates unchanged and signaled 3 interest rate cuts next year. I also want you to, I'm going to give you a little side note here. Remember, the entire world is watching us right now. The BRICS are splitting off and they're getting so much momentum. They're convincing other countries to split off with them. If we drop interest rates, that's less of a rate of return for other countries to hold our debt. That makes sense? All right. So also, this is going to give the government a small reprieve going into the election, saying, we're still good. We can pay our debts, pay the interest on our debts. And I want you to understand, once this election's over, the rug's going to be pulled, right? But here's the other thing that is a variable in this entire thing. As other countries are saying, whoa, so wait a minute, they are juicing the markets again over there. They haven't got the control over their inflation. They are lowering the rates. This is going to spell disaster. I believe you're going to see even less countries showing up to our bond purchases. And that is another sign that you want to watch. So you've got two signs. Our country showing up to buy our debt, right? We already know that less and less every time we need to sell bonds, our country does, we have less foreign buyers. The second thing is that the Fed is going to lower rates in an environment that they say is all right. Stock market's up, everything's up. Why would you lower rates? The reason why is they're actually lying to you. They're going to tell you that the economy is good, which is they've never, ever, ever lowered rates in a good economy. But what they're going to do is they're going to say all economic indicators point to the fact that we're going into a soft landing. We're not going to have a recession. And do you remember I told you, and it's very hard to cut through. I mean, I do so many videos, right? And that's why I go way more in depth, because consulting had just kicked my butt. I was so busy. That's why I built these courses, a consulting style course where I'm talking to you, I'm showing you the graphs, I'm educating people to the point where they get it and they go, okay, oh my gosh, now I see where we are in this cycle. Now where do I move next? So you're not losing a ton of money, right? I've told people that if they are not prepared, they're going to get caught in this trap that comes in the late spring. Why late spring? Because once the Fed lowers rates, and we're going to see equities and certain things rise even more, we're going to really see gold move up. What you're going to see is that those economic indicators, when I talked to you about the one, a month ago at least, that they were doing something, they were taking the average of certain inflation indicators so that it would slow it down the time that you would actually find out the truth, because they're doing a 3-month average of certain inflation indicators. But the thing is as they drop those rates, people are going to rush into things and certain assets are going to inflate. And after enough time, and that's why they don't want to do it too soon, they want to do it late spring, midsummer, because when that data starts coming out, they want the election to be over already. Type 3 if you understand what I'm talking about, if you totally get this. This is a total snare, a total trap. You're going to have all these YouTubers running around going, this is it, the housing boom 2.0. That's going to be like the clickbait of clickbaits. Housing boom 2.0. Use my affiliate links, do all this stuff. We're like, all right, there's nobody that's calling this ahead of time. But the cool thing is I got the coolest students in the world. I can actually bring you through this entire deal. All right, so if the Fed Chair Jerome Powell's move indicated the central bank is on a path towards lowering interest rates more sooner than expected, said Dana Anderson, a journalist for Redfin, who authored her company's weekly housing market update that was published on Thursday. She added that it is yet another sign that mortgage rates could drop to the mid 6% range this next year, in line with forecasts. Let me also add, if the bond market hits a floor, because bond traders are smart. See, bonds always tell you what's going to happen before it happens. Throughout history, any bond trader can tell you when we're going into a recession, we're going into a crash. Why? Because rates act accordingly. All right. So right now you have a bunch of what I believe to be Looney Tune investors, and this is akin to the .com buildup, that are diving in. The rates are dropping and they're all excited. You're going to have a flippening. Remember, stock markets rise in hyperinflation scenarios, in inflation and in hyperinflation. The only difference between the two speeds is when you're in inflation, heavy inflation, the markets run up high because people are buying and they're chasing yield, they're chasing gains. When you go into hyperinflation, the stock market just crazy skyrockets, but it never, ever, go look at Venezuela, go check hyperinflation in the stock market and in their food. It never keeps up with food. Please understand that. The two things, food and energy, the two things that we either can't or don't want to live without, it never keeps up with those. It's just like whenever there's a crisis, what's the first thing to go? Toilet paper. It's the one thing. And look, again, we're talking about psychology. It's the one thing that people walk out and their hands are full and they're going, I did something for 10 bucks. And they're not looking at the inflation of this, okay? This is very, very serious. So she, from Redfin, goes on to say mortgage payments are at their lowest level in 8 months. They're going to keep hitting you with these numbers, okay? But remember, even with mortgage rates at their lowest, I'm going to give you not advice, I'm going to tell you what I would do. If you have a higher rate right now, if you can refinance it and pay zero fees, go do that. Go do that. Lock in a lower rate. If you are getting charged fees, you take those fees, you look at the difference in the total payment. Don't do adjustable rates right now. This is too dangerous. But you get another 30-year fix, you take all your fees, how much is it going to cost you out of pocket? And please do not fall for the trap when lenders go, oh, we can just wrap this to your loan. That's their easiest thing. They don't want you to see what you're doing because they want that bonus. They want their commission, okay? You find out how much the loan's going to cost, total, all your fees, your points, whatever. And if you can't get that money back in the lower payment, if you divide that over the next 12 months, if you can't get that back, don't do it, all right? Please don't do this. There are a lot of people out there that are freaking out, and you've got to look, are you going to be house poor? What are you doing with that equity right now? A lot of people are going to go out and spend it on frivolous things. All right. Now, of course, mortgage rates are still more than double their pandemic lows and the several years prior, but they've fallen substantially from their peak in October of just 8%. Again, people can't get these spikes out of their thing. When this comes down, you're going to see an about-face reverse course, and it is going to shoot to the moon. I'm telling you. You're talking about at least 12 to 15 month out cycle that we're talking about. But that chart that I just showed you, for those of you that are just jumping on, of the Federal Reserve, the history of the Federal Reserve's fund rate freak out, there have been multiple times. Again, to all the students that have taken the how to prepare for the crash course, there's like 37, 38 videos on there. There's a new video, very detailed. I put one out for free here. I did a very detailed one. It's called the Fed Fake Out. Go check it out. It's very important that you watch this because a lot of, unless you're buying properly these properties, you're going to find yourself in a trap if you're buying for speculation. This is not the time. You're going to see a bump in real estate prices. You're going to see some dumb money. But you know how you're going to be able to tell if this is a fake out? It's the volume, the sheer amount of volume. Savvy real estate investors are pulling out. So yeah, the Fed fake out, 80% off links are down below. I'm so excited to bring you through this time, and I think it's very vital, very important that you watch this. Now look at this. We're going to do one more thing on CNBC. Let me just look at the headlines because there should be some propaganda already out there on this. No, there's not. Nope, hold on, I'm not there. Okay, retail sales rose 0.3% in November versus expectations for a decline. This is something, please copy the link to this video. Remember this, because I'm going to tell you what's going to happen right now. Because what's happening is the government is trying its hardest, and that's why channels like this have some issues. To everyone that's hit the subscribe button, I really appreciate it because they want to push you in. And remember, the last year and a half, 2 years, all we've seen is they put out numbers at this level, and then the next month, and they always revise them down. The truth comes out, oh, they weren't that good, they're bad. But the problem is Main Street algorithms, trading algorithms, people that are completely clueless, by the time they put out those, they're already looking at the next month's numbers. They don't care. They put them out in a way, it's stealth, you don't get it. So check this out, right out of CNBC today. Retail sales rose 0.3% in November versus expectations for a decline. I am going on record saying that in 30 days, you're going to see this revised down. It said retail sales rose 3.3% in November, stronger than the 0.2% decline in October and better than the Dow Jones estimate for a decrease of 0.1%. Sales held up despite a 2.9% slide in receipts at gas stations as energy prices broadly slumped during the month. Again, oil is dropping in price because traders are already and have already over the last 2 months priced in a recession or a correction. This is not a joke. So think about this. How many of you went out on Black Friday? Probably not many of you because you're part of Ninja Nation. You're awesome. You're not going to get caught in these traps, but these stores were completely empty. And I told you, I'm like, these numbers are going to be abysmal, but we're not going to find out the real numbers until January because we need to see Q4 earnings. We'll see when you're looking at investing in real estate, you have to look at everything. It's not just like getting your blinders on and looking straight at the price of a house. You've got to look at the health of the consumer, the health of the economy, the companies. Remember, companies are laying people off like crazy right now. We just saw another company. I just saw the news article that is big around Christmas. Which one is it? And toy company Hasbro just announced they're laying tons of people off. Put it down in the comments. How many people are Hasbro laying off? So when you think that toy sales would be doing great, they're busy laying off people. All right. Amazon laying off people. UPS laying off people. It's a big deal. 1,000 people that are laying off. All right. My point being is this. You're going to see these numbers come out and they're going to be brought down lower. There's some people, and it's about 1% of the idiots out there. You'll see them in the comment section. Very rarely they'll come out and say, look, you're wrong. And well, about what? Because I use sarcasm and you can't figure it out. I think it's a really, really big deal. People need to pay attention to this. And if you don't, you're going to get caught up in this. So what do you need? You need to start getting boldness. And how do you do that? You get boldness by education. You get boldness by getting around the right people. You either get into coaching or start studying your tail off. Think about how it would have been if you were prepared for 2008 before. Remember, I'd sold my homes in 2006, but it wasn't because I was a brainiac. It was because I was following everything that happened in 2005. The mortgage-backed securities crisis happened in 2005. I sold my homes in 2006. I saw from 2006 till 2008 when everybody was told, oh no, it's happened. There's a crash. I was listening to smart people like, Peter Schiff. And you know that phrase, a broken clock is broken, it's right twice a day? Yeah, that's like the most basic thing. No duh, Sherlock. Well, here's the thing. What side of that clock do you want to be on? Because when that time comes around and you're right, the 2 times a day when that clock's broke, everyone else is going broke. So do you want to be ready to go and crush it? Well, you need a set of tools. You need a plan. I give you that plan. And for the next couple of weeks, it's at price at $199. It's 80% off. That price after the first will never go to that price ever again, ever in history. Hold me to it. I've done some things where I said it was a certain price and then I brought in bonuses and all that kind of stuff. I wanted to get the most students involved and I give it 100% money back guarantee. If you haven't watched over 50%, by the time you hit 50%, you go, you know what, this isn't for me. Within 14 days, return, I give you your money back. I have had to do that just a handful of times. And I will tell you this, I can guarantee you this, once you have the roadmap and you start seeing these videos coming out and hold me to my word, watch this channel, mark these videos. I'm telling you right now, they are baited you. Gold's already moving up. I've talked about how I buy gold. I've talked about how I buy silver. I've talked about certain cryptos. Every single thing I've talked about over the last 2 years are up. The one thing I told you that's going down is housing. And look at it's going down. It's already going down on a national level. While all the cheerleaders out there telling you to buy, and there's about to be this slight little blip, a little blip on the Case-Shiller price index. It's going to go down in history. It'll be infamous. And we're going to call it the ninja blip. I'm going to have to call Shiller and Case, and I think one of them's dead. But point being is that it's going to be this little blip, and it's going to, a bunch of fools are going to run into this little blip where the Fed faked you out because the government called them up and said, we're your boss. But that's not the truth. Actually, the Fed's in charge. But my point being is they're working cahoots and they're going to sucker in a bunch of people. You're not going to get suckered in. You're ready for this. If you guys want the Fed fake out discounts down below, when the links are gone, they're gone. And after January, it don't matter how many links I drop. These things are over. The Economic Ninja, I'm not joking. I screw that up every time. The Real Estate Ninja, different channel, is out.